In recent years, with the growing popularity of crypto, there is a new form of consumer lending emerging. That's called crypto lending. So what's crypto lending? Why people participate in it, either as an investor or borrower, and what are the risks associated for different stakeholders? Hi everyone, my name is Frank Tian. Today I will break this down in this video for you. First, what's crypto lending? Lending is a traditional financing activity. Here, the only difference is that this lending is based on crypto instead of the traditional fiat money, like US dollars or your local currency. People can participate in crypto lending either as a depositor or borrower. Depositor means you deposit crypto into the lending pool because you are looking for a certain return. Deposit crypto, so the depositor can also be called an investor. Some people also call them lender, but lenders in traditional finance referring to banks to avoid the confusion. So here I refer to them as investor and depositor. Okay. On the other side, you have a borrower. So they want to borrow the crypto. In some cases, they want to borrow the traditional fiat money. We'll have examples to look at both cases. Also, crypto lending is a type of secure lending. Because the volatility of crypto asset, right? So here, I don't want to call the cryptocurrency, although that's the original name. People hoped the cryptocurrencies can replace the legal tender, such as the US dollars, but due to the volatility, that hasn't happened yet. That's the reason I call them crypto here. Because the price of crypto could change up and down a lot. So to safeguard the loan, the borrowers, they need to put in collaterals. Okay, so these collaterals are in the form of crypto as well. So they are often applied with a collateral factor. So make sure they over collateralize against their loans in case the crypto price drops a lot. So the borrower needs to put in the collaterals for the loans. That's why crypto lending is also a form of secure lending. Okay, and also it's interesting that in both cases, right, either as depositor and a borrower, you need to put in the crypto. Depending on whether there is a centralized party exchange involved, the crypto lending can be classified as centralized versus decentralized crypto lending. So centralized crypto lending is a part of the centralized finance. It actually follows the traditional model. There is an intermediary. Here is the exchange. They assume the custody of cryptos from both the depositors and borrowers. They perform the function as the traditional bank, right? So who takes the money and also lend the money out. That's why the crypto exchange is also called a crypto bank. The example is BlockFi. There are many other exchanges these days. Other model is the decentralized crypto lending. Okay, so in this case, this is the true form of decentralized finance. There's no exchange involved. All the parties, they need to do the self-custody. This is good that you take out intermediary in between, but also risks if you don't handle your cryptos very well. We all know that there's a gentleman in the UK that they lost a sizable number for Bitcoins. So he's trying to get that back from the dump site. Okay, that's just the unfortunate event. Then the crypto lending is managed by DeFi protocols. So it's managed by the programs. Example is Compound. And there are several other main lending protocols in use today. Now let's look at why people participate in crypto lending. First, investors and depositors. Okay, so they deposit crypto in the lending pool. Obviously, they are looking for some returns, right? So typically, these are the people, they already hold the cryptos and they do not want to sell their cryptos. They really want to hold for long term. Remember the term, hold on for dear life. Okay, so they long the crypto assets. Okay, but they also want to look for some returns, right, from the assets. Now the crypto lending provides such an opportunity. So by deposit crypto into the pool, they can earn some returns, maybe 5%, 6%, depending on what crypto, depending on the demand in the market. So that's higher than what the traditional banking accounts offer, right? So that gives them the incentive to put the crypto into the lending protocols or into the exchange. Okay, so there's underlying belief for the investors is that the price of crypto will continue to increase, or at least it will hold during the investment horizon. So for many, so the investment horizon could be the lifetime, right? So for some, it could be maybe 10 years, 5 years, 3 years. Maybe they don't believe that the price will stay up there, right? So forever, but at least for the investment horizon for them, so the price will hold. Okay, so the crypto here we talk about is the native crypto, such as the Bitcoin, ethereum. So some people they are not so sure about the price, right? So in that case, the exchange, okay, they invented the stablecoin. I would treat that as a separate financial asset or financial currency. Okay, so here what we talk about is the native crypto. And for stablecoin, its application, I will touch upon briefly later in this module. Okay, so that's the belief of the investors and depositors of crypto lending. Okay, you will see that that's not necessarily true for borrowers. Okay, so why borrowers participate in crypto lending? First, who are they? There are institutions, there are also individuals, institutions including market makers, hedge funds. They borrow the cryptos to participate in some sophisticated trades. The purpose could be market making, hedging, arbitrage, shorting. And on the right hand side, we have a illustration graph, right, from a block file. So how it works is that the borrower talks with the exchange, right, to determine the collateral, how much collateral, what's the percentage. You can see on the top that in the case of institution, it could be a combination of Bitcoin, alternative coin, the fiat money, and fund shares. Okay, so once the collateral is delivered to the exchange, the exchange will release the loan in Bitcoin or crypto, or in the fiat money, right? US dollars, for example. Once the loan is funded, the borrower just needs to pay the monthly interest to the exchange. At the end of the loan, the borrower pays back the principal then the collateral will be released from the exchange back to the borrower. For individuals, it works the same, just individuals do not have the negotiation power, so they will have to accept the collateral factor posted by exchange for the particular crypto asset. Okay, so now let's look at some cases. One scenario is that the borrower receives the loan funds in cash. Okay, so again, they want to access some cash without selling the crypto. For example, they have some Bitcoins, but they want to buy a car, $30,000. That's a pretty large expense. If they sell the crypto, they probably acquired it from a very low price a couple of years ago. That trigger the capital gain event, and they need to pay a tax, which could be costly, right? So they don't want to do that, so they can use the Bitcoins as collateral and borrow, let's say, $30,000 out, right? To purchase that vehicle. This is a planned event, right? There could be some unexpected event that they need a large amount of cash. So doing this way, they get the large amount of cash, they avoid the capital gain tax, they actually delay that to a later time, right? And also for some, they do not have alternative lending vehicles. Okay, just remember the demographics of the crypto holders. A lot of them, they are pretty young. They haven't established the solid credit bureau file. So, but crypto lending does not need credit check, right? So it's a secure lending. So that's the reason the interest rate is relatively low compared with some other high interest borrowing. So this is an advantage for some, and also speed of funding. Some people like that, get the fund instantaneously or pretty fast. But actually, if you qualify for traditional loan these days with fintech and even traditional banks, they will release the fund pretty fast. So that's the reason I listed at the end. It's not a huge reason for people to resort to the crypto lending. Another scenario is that the borrower receives the loan funds in crypto. So why they want to borrow the crypto? One example is that short selling. The borrower bets that the price of the particular crypto will go down, right? For example, this borrower sells 1 unit of Bitcoin at the price of $60,000. Then it buys back 3 months later. At that time, the price drops to $50,000. Okay, so assume the interest rate for this loan is a 12% APR. Then the interest for the 3 months is $60,000 times 12%. Then you translate it into 3 months. That's $1,800. Then the borrower earns $10,000. That's the price differential, right? Then minus the interest cost, so $1,800. That's a nice and cool $7,200 profit. Okay, so that's an example that why people borrow the crypto.